QuickBooks Pro Desktop 2021 Company Preferences, Sales and Customers, and Sales Tax. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file homepage. We're going to go into the preferences by going to the edit dropdown and going on down to the preferences at the bottom of it. We've been going through the accounting on down to the reports and graphs. Now we're in the sales and customers. So sales and customers, we're in the My Preferences item. It says add available time costs to Invensoids for selected jobs. So this is going to be a way for us, the invoice is going to be something that we create. That's going to be our bill to the customer. Now we can set up the entering of the time and costs in such a way that when we enter, say, bills or enter time, that it could then be applied to the invoice automatically once we then create the invoice, which is a nice feature. It has it here saying, prompt me, ask me when you're going to basically apply something else. So therefore, if I apply a bill to a job and then I want to assign that to an invoice or something like that, if I want to assign it to the invoice, it's going to ask you before it just puts it into the invoice. It's going to say, hey, do you want this to be part of the invoice? And typically I would want to keep that to make me aware that there is that link going on, or be more aware that there is that link. So I'll keep the default there. Using shipping method. So if we have a shipping method that we're going to be using or standardizing, we have our shipping methods down below. And then using FOB, we can say the terms FOB, shipping point or destination, and so on. If you want more information on that kind of shipping item, if you're in an industry that is shipping, then and you want more terminology in terms of what it means to be FOB shipping and the shipping terms, then you can look at just basically accounting theory courses for inventory type of transactions for that. We're not going to get into a lot of detail here with it. Warn about duplicate invoice numbers. So it's good, once again, to have that checked off so that when we have different invoice numbers, they're going to be generated from the system. The system is going to have numbers that will be generated. If we have the same invoice, then that could be an indication that there is a problem. The good internal controls would let us know if we have a duplicate invoice number. So we'll keep that on. Choose template for invoice packing slip. So here's going to be the templates that we have set up for the packing slip. Enable collections center. So I'm going to keep the default as unchecked for the collection center. Custom pricing. So we have no custom pricing or enable the price levels. I'm going to keep the default as enabling the price levels. Let's go on down to the sales tax now. This is often kind of a bigger issue, or a big issue for people that are sales tax applies to them. So once again, nothing in the My Preferences tab. If we go into the company preferences, we have the sales tax. Now, sales tax is a tax that's going to be based on basically, supposedly on the customer, right, for the purchase that takes place. The sales tax in the United States is going to be a state level tax. So the state determines whether or not they're going to have a sales tax. On the federal level, we don't have the sales tax in the United States. We have the income tax, typically the main tax source in the federal level. On the state or local level, then we might have the sales tax. It's a usage tax. So in like Europe and whatnot, they have a usage tax and whatnot. It's going to be the same kind of concept in that regard. Although again, it might be on the federal level in other countries. So that's going to be the thing with the sales tax. Now the sales tax, because it's going to be different from state to state and locality to locality, it's a little bit more confusing because QuickBooks can't just blanket it across, say, the whole country, say the whole US at least, due to the fact that it has those differences depending on the state that we are in. Therefore, sales tax can get a little bit more complex. Now, if you're working within one particular state, then at least it won't be too complex, because then you can apply the rules for that state. If you have commerce that is taking place in multiple states, if you're shipping things, for example, in multiple states, then you got to take into consideration the sales tax rules and policies for multiple different states. We're going to use one sales tax level here for this practice problem, as if we have one state that we're going to be paying sales tax to. If you want more detail on sales tax, we might go into more detail just specifically in sales tax in a future basically course, or possibly adding to this one. But we'll turn on the sales tax and apply it to one state at this point in time. Now, this is just one part of how we're going to have to set up the sales tax. When we set up the sales tax, we need to turn it on. So I'm going to turn it on here in the preferences. And then we've got to set up our sales tax item so that we can then use the item and then make sure that the customers that we have are going to be subject basically to the sales tax for those items. The items that are usually going to be subject to sales tax in the US are not usually service items. They're usually going to be the inventory items. So we have inventory items are often the items that then would be subject to the sales tax. Service items often not. Therefore, we're going to have to find the things that we sell, which we'll do when we set up our items, and determine whether or not the sales tax will be applicable to them. Then when we make the invoice, we'll put the item that we're selling in the invoice. If it's a service, it might not be applicable to sales tax, and therefore no sales tax will be calculated on it. If it's something that we're selling, a physical good inventory, then QuickBooks will know to apply the sales tax in general. So once we have this on, we can add the sales tax item, and this is going to be setting up the item that will be charged the sales tax to. Before we do that, let's go down below and just check out the other settings. So sales tax codes determine if the items you sell are taxable or non-taxable. So taxable items, when we set up the inventory items or the service items, and service items, we can determine whether or not they are taxable or not, typically the inventory items being the ones that would be, with the indication of taxable that is shown here. That's the default setting. So if it's taxable, it's going to be showing taxable. You can add another one if you would like to have some other indication. Maybe you want to have like sales tax or something other than just tax, but it will be on the invoice, so we can kind of assume we're talking sales tax here. So then the non-tax item code will just be non. And again, you can set another one up if you would rather change that. And then we have the identity taxable items as T for taxable when printing. So when you're going to print, the capital T means it's going to be a taxable item. So when do you owe sales tax? Now, when you have the sales tax, typically you make the sale, and then you're going to have to be charged sales tax on it. So logistically, what's happening? The state is saying you're going to sell something to the customer. We are taxing the customer in theory. So you're going to have to take your sales price, increase it by whatever the rate of the sales tax is, collect that tax from the customer, and then you're collecting it from the customer as the go-between, and then pay it to us, the state, or locale, or whatever, the government that is going to be taking it. So therefore, logistically, you got to say, okay, well, you're going to need some time to collect the money and then pay it to the government. So over here we have when do I owe the money? So there's going to be some lag period. If I collect the money, do I have to then collect the money for all the sales that I make during the month? And then how long do I have to pay the IRS after the month is over? So it often is determined. It's going to be determined from locale to locale, state to state, locality to locality. But most of them will then have further restrictions in terms of how large your sales items are. Meaning, if you don't have many sales that are on account for your sales tax is typically fairly low, the IRS might even go annually. They might say, hey, just collect sales tax for the entire year and pay us annually on it. Or if you have higher sales, they might say quarterly. We want you to collect the sales quarterly and then pay us. Or they might say, and we're going to keep it here, on monthly. They might say if your sales are up of a certain level, typically it's going to be monthly. It'll depend on the state you are in. So you'll have to look at what the state regulations are as to how often you have to pay them. If it's on a monthly basis, for example, if we collect sales tax in January, then the question is, well, when do I have to pay them? It's going to have to be sometime in February, right? You're going to have to pay them sometime in February for the sales that were made in January. So that's going to be the typical rule. That's going to be the rule that we will apply. But again, it could change based on your locality as to how often you need to pay them. Then there's a question of, well, how do I accumulate the sales tax? Because if I accumulate the sales tax when I make sales on account, I haven't yet received the money at that point in time. So you could feel like it's not fair to charge sales tax if you're charging sales tax on the sale I made when I didn't yet get the money in order to pay the sales tax. So it depends on the state and the locale. You have to take a look at what it says. But the default typically is the accrual basis method, meaning when you make the sale, whether you make it for cash or you make it for non-cash, it counts as a sales, and the sales tax is often going to be charged at that point in time. But if your locale is different, or if the rules are different, or if you could say you're on a cash basis or something like that, then it might be here where you're going to not charge the sales tax until you collect the sale. So if you made the sale, and then you're not going to charge the sales tax for that month until you get the money, which could be like a month later. And then from that point forward, that's when you gotta record the fact that you have the sales tax at that point in time and have to pay the portion that you got from the customer in the form of sales tax to the government by the following month. Okay, so let's go up top and let's add a sales tax item. So we're gonna go up top and hit this little add a sales tax item. The drop down will typically default to the sales tax item. That's what we want. So we're gonna be adding a sales tax item. The sales tax name, I'm just gonna call it California sales tax. We're going to say that it's a California tax. So we'll say California sales tax. And then we have the tax rate. Now in the practice problem here, I'm going to just assign a practice tax rate of 5%, 0.05 or 5%. Yes. So no, that's not what I want. 5%. So there we have that. And so I'm just going to assign a flat 5% so that we can basically standardize this problem. Now, of course, again, the sales tax will change from region to region that you have set up. So you're going to have to assign the sales tax that is applicable to you. So I'm going to hit the drop down here. I'm going to add a new, and I'm going to say new, and I'm going to call it. So this is basically a vendor screen, people we pay. So it's the same kind of screen we would have for the vendors. We'll go into this in basically more detail when we add more vendors. But notice, of course, we have the address field and then payment settings and all this information on the bottom. Many times when we pay the vendor, what we really need, obviously, is the required field up top is the vendor name, because we just need the name to put on the check or the payment that we're going to be making. So we'll talk more about this in the future, but we're just going to enter the required field at this time. Then I'm going to say OK. And so there is our vendor. So I'm going to say OK. So we'll say OK here. And then, so now I'm going to select the drop down. We want this item, California sales tax. So we're going to be picking up the California sales tax code determine. We're going to keep this as is, and we'll keep this as is. So now let's say OK. I'm going to say OK up top. Make all existing customers taxable. Now, when you do the sales tax, then the other two components of this that we're looking at then is the inventory items. We have to determine which things we sell are taxable. We'll talk more about that when we add the inventory items. And then which customers are taxable. Now, normally all customers are taxable. If you're subject to sales tax, if we make a sale in California at our store on an item, something that is taxable, it will be taxable. But you could have a rare circumstance where you have like a nonprofit or something like that customer that might be non-taxable. So typically you want to keep the default here to make all customers taxable. And then if a customer if you have a non-taxable customer for whatever reason, then, and you might want to look into that, because it depends on the industry that you're in, that you could have customers that are non-taxable if you have resale items or something like business to business or whatever. But if you're selling to customers, normal end users or something like that, then the default you would typically have all customers would be taxable if the item you're selling is taxable. Make all existing non-inventory and inventory items, item parts taxable. I'm going to keep that as the default as well, and then we'll get into that in more detail as we add the items. So I'm going to say OK, and then QuickBooks must close all its open windows to change this preference. So I'm going to say, all right, go ahead and close all the open windows to make that adjustment. Now, if we go to the lists up top then, and we'll get into more of these items in a future presentation, but for right now, let's just see that item that has been set up. I want to go to the lists up top and go to the item list. So if I open up the item lists, we can see now this is that item that we have set up, basically the 5% price here in the sales tax. So if you wanted to change the sales tax or add more items for different sales tax locations, this is a place we would go. If you hit the items drop down, then you can edit the item here. And if you edit the item, it's going to take you back to this basically editing field, this editing place. So I'm going to close that back up. Now the next thing just to remember, if I close this back up and I'm going to go to the company drop down, open up the home page again. I'm going to maximize this screen, maximizing this screen. When we make an invoice, that's what we're going to use when we make a sale or a sales receipt. These are the two documents we will use. Opening up an invoice or a sales receipt, then this is the document that we would have in order to, or the form or whatever you want to, the form QuickBooks would call it, or document that you would put together, having the customer up top that we will be adding later. Then you'll have the inventory item. The inventory item, then we will tell QuickBooks whether that item is a taxable item. If it's a taxable item, then the tax code down here will be applicable. Notice this is the tax rate. If I select this here, it's going to give us our 5% tax. So there's going to be our 5% tax that we would then charge. As we record these invoices, we would then be collecting from the customer not only our price, but including that 5%, tracking that in a separate location, and then we're going to have to pay that to the state at some interval. And again, we're going to be collecting it over the month. So for the month of January, for example, and then paying that paying the amount that we collected in the month of January or charged for the sales tax that we have to pay are due. And then we're going to be paying that amount in February. So we'll get into sales tax more later. I'm going to close this invoice and we're not going to save it, and that's it.